Welcome back, folks. Cryptocurrency Watch Group Pro Charts. Hope you guys doing pretty good. We're going to show you how to do options. In this video here, we're going to go over calls and puts. And this is just for beginners. We're going through how to buy a call, how to sell a call, how to buy a put, how to sell a put. So if you like this type of video, please hit that like button, subscribe. If you have any questions, leave it in a comment. Now, a call option gives you the right, but not the obligation, to buy a stock at a specific price, a strike price. So we'll go through that strike price before a certain date. And the certain date is an expiration date. So what are you guys going to do? You guys go pick a strike price and an expiration date when you do a call option, and that goes well as a put option. You buy a call option when you think the stock will go up. So a call option is you're betting on that stock to go up. So you're actually putting a long order in for that stock. On options, it's called a call option. That means you want the stock to go up to a certain strike price. And then if that stock price goes higher than your strike price, you can buy it at the lower price, the strike price. So you could buy that stock. You could exercise your rights to buy that stock at that strike price that you pick. Every contract, when you buy a contract, is 100 shares. So you're buying a contract that someone has 100 shares on the open market, a premium. So you're going to give them a premium right off the bat. And we'll go through the premiums. A put option is when you're betting on that stock to go down. So basically, you're going to short that stock, saying that stock is going down. A put option gives you the right, but not the obligation, to sell a stock at a specific price before the expiration date. You buy a put option when you think the stock price will go down. If the stock price drops below your strike price, you can sell it at a higher strike price and potentially make profit. So your premiums, you pay a price, which is called a premium. This is the max amount you could lose. So when you're buying an option, a stock, 100 shares, you will have a price on there. That person might be selling each stock for $5. So, but you have to buy 100 shares. So 100 shares at $5. So that would be $500 you're paying for that stock. Here's your strike price column right here. To say you have a strike price at 135. Your expiration date you picked was January 24th, 2025. You want to make sure that stock, by your expiration date, goes above 135. Because if it does not hit your strike price of 135 and it stayed at 133, by the expiration date of January 24th, would be worthless on the expiration date. So that meaning you wouldn't make no money and most likely lose all your premiums that you paid. So it's very important to pick a right expiration date where you think the stock will go up or down, and a right strike price. Now let's talk about in the money and out the money. Further out of the money you go. So let's say Nvidia, it's at 134. I want to do a call option, meaning the stock's going up. So I'm going to do a call option, and I'm going to pick my strike price, January 24, 2025. I want to be out of the money, so I'm going to pick a strike price at like 138. And you see this 138, I'm out of the money at 138. So my premiums that I'll be paying for this call option will be $7.25 for the ask, and for the bid, it will be $5.95 for the bid. So now you times 100 shares, I'll be spending $595 if my bid gets filled at $5.95. Or if I buy it at the ask with 100 shares, I'll be $725. So that's the premiums I'll be paying out for the 100 shares. So now if you pick a stock that's at the money, so you were doing a call option saying it's going above 135. So at the money, the stock is at 134.70. My strike price right here at 135, I'll be at the money. In the money is when you get the stock below 134. So it's at 137. It's at 134.70. If I get the bid at $134, I'm in the money. But you can see the premiums just got higher. The bid is at $8.20, and the ask is $8.55. So I'll be spending a lot more money to be in the money than I would if I was out here out of the money. My premiums would be a lot less when I'm further out of the money. It gets less. So you just have to make sure when you pick your strike price out of the money and expiration date, further out you go on the expiration date, the more expensive your premiums will be because you're going out a longer time frame, if that makes sense. So if we did December 27th, you could see my premiums right here at 135 is at $2.88. But I only have 4 days left before the contract expires. So I wouldn't want to do that unless I know NVIDIA will be above 135 by December 25th of this year. But if I decide to go out to February 21st, and for a strike price at 135, you see my premiums right here. I'll be spending over $1,000 for the bid and over $1,100 for the ask. So you're paying more in premiums the further out you go. Let's do July. And you can see July, you're at $22.25 for the ask and $21.95 for the bid. Because I'm out to July 18, 2025. And the same thing goes with the puts. It goes the same way. You can see on this side here where the puts, the premiums are. So that's what you guys got to watch out when you go in the money, out the money, or at the money. So if you're further out, if you're out of the money and you pick a higher strike price, the cheaper it gets. At the money, your premiums get a little more expensive. In the money, it gets more expensive. So if you don't have a Fidelity account, open up a Fidelity account, a brokerage account. I'll leave a link in the description for Fidelity. You need to open a brokerage account, like I said earlier, and you need to get approved by Fidelity. Your options when you open your brokerage account. In my next video, we'll log into the Fidelity account. I'll show you how to place an order on Fidelity, how to do a call option, and then how to do a put option. So if you like this type of video, please hit that like button, subscribe if you haven't already, and if you have any questions, leave it in the comment below. Have a great day. Thank you for watching.